This is your call to action. Get prepared, America. Economy, survival, energy, disasters. This is USAPrepares.com. Informative radio, educational radio. Interact now by emailing instructor@USAPrepares.com or text at 417-200-4715. Class, please take your seats. Now, your instructors, Vincent Finelli and Mark Wright.
Welcome to USAPrepares.com, where converging threats are confronted daily. On KWTO 560 AM, the powerhouse of the Midwest, I'm Mark Wright. I'm here in the classroom with the original survival economist, Vincent Finelli. Vincent, today's threat, converging threat, is the economy. Why don't you introduce our guest instructor today, Vinny?
Mark, I'm delighted. We've got Steve Rand from Swiss America Trading Corporation. I'm going to give you a phone number, class, so that you can write this down before we begin. If you've got any questions, it's 800-630-1498. Let me say this. Steve Rand is with us with SwissAmerica.com, and at our expo, he was there, Richard Cromwell, and Phil Gordon, three of the best metal experts I know. Class, we're going to have the next expo, the fall edition, September 9th and 10th. Steve Rand will be with us then. And welcome, Steve Rand.
How are you today, guys?
Oh, it's great.
Doing great, Steve. Good to hear your voice.
Yeah, you as well. Glad. I'll be looking forward to seeing you guys again soon as well.
Yeah. We've got some questions for you, and let's tell our class that if they'd like, during this broadcast, they can call Swiss America and get a copy of Craig Smith's book, The Inflation Deception, and they can get that at 800-630-1498 and just ask for The Inflation Deception. And, of course, you can ask for, after the broadcast, Steve Rand, Richard Cromwell, and Phil Gordon. Steve, I've got some questions about gold. You know, we're talking about the gold ceiling on Tuesday with Bob Chapman, and he said, yeah, it's pretty serious. Basically, what's happening is the government has borrowed everything that they could borrow up to this point. They've spent almost all of it, and very shortly they are going to run out of spending capability. How will that affect the price of precious metals, in your opinion?
Well, how it will affect it in the short term, it's a little uncertain, because it could certainly boost some confidence in the equity markets in the short term, but that really doesn't matter in the long term, because what we're really doing is continuing to add to the same problem we've been adding to for years. We're spending money we don't have. The deficit's gone up 400% in the course of the last 10 years or so, and gold prices have gone up 500%. So it stands to reason, even if they raise the debt ceiling by $2.5 trillion, as they're mentioning, or if they cut off $400 billion a year from what they were intending to increase it over the next 10 years, you're still increasing the deficit exponentially over that period of time, and that's going to have to result in higher gold prices with any common sense.
Well, that's what I was trained when I was a finance student back in the 70s. That's what I learned. I learned the fundamentals, and it seems to me very clear that if you create more digits, or as some people say, print money out of thin air, when that money or those digits enter the system as people spend them, more dollars chasing the same amount of goods, that causes inflation, and that reduces the purchasing power of the Federal Reserve note, and that in turn makes gold appear more expensive, and silver too. And I guess
exactly. It's not necessarily a question of gold necessarily being more valuable. It costs a lot more of those deflated dollars to buy the same ounce of gold. Mm-hmm. And if you go back through time, you can find that an ounce of gold buys you the same thing today, at least, as what it did even 100 years ago. So it's not as if that increasing this debt levels in the future are not going to continue that trend. It's just the way it is. If you jump off a building, you're not going to say one day that I won't fall, because I don't think it will. Gravity says you're going to fall, and that's exactly the same reasoning that gives you the understanding that gold has to increase.
That's a very interesting analogy, and you say that gold buys the same thing for over a period of history. Years ago, I was asked to speak to the Kiwanis Club in a town, maybe 50 miles away, and they said, just talk about anything. So I got my PC out, and I did some research. And what I found out was that you could buy a brand new Corvette almost any time during its production, from the 50s all the way through current production, for about 50 ounces of gold.
That's correct.
And
Absolutely correct.
yeah, and I've heard the analogy about you can buy a men's suit, I don't know, 1913, and go out to dinner and still have some money left over. And you can still do that today for an ounce of gold. Well, the same is true for the Corvette. Absolutely true. And I have been able to make my savings work better for me by investing in precious metals than all of my relatives who have not taken my advice. And have you seen that too? Have you seen people that just say, no, my stockbroker says I should do this, and now gold is barbaric, shouldn't be involved in that because it doesn't make any sense. Are you getting the same kinds of information that we are here at usapreparers.com?
Well, I hear that every day from people that say my financial advisor, my accountant, the bookkeeper at my work, my brother-in-law, they say that I shouldn't buy gold. and generally speaking, I think I ask, especially when it comes to a financial advisor, do they have a vested interest in telling you that? Because right up front, we'll tell you that we recommend sound diversification in a portfolio. We recommend no more than 20 to 25% in tangible physical gold, because you have to be prepared for every different situation. Most of the times, the financial advisor is going to recommend you put all of your money in paper, probably the worst track record anything could have over a long period of time. Now, I'm not saying that at times those things are not going to outperform gold, because they certainly have when the economy's been solid. But you always should have a foundation, a core position in gold, 5 to 10% in normal times when things are good, 20 to 25% in turbulent times like we have now when it's both warranted and prudent. But you have to understand that when you talk to your financial advisor, you have to take their advice with a grain of salt, because they do have a vested interest. You're going to be taking money that's otherwise invested with them and moving it into another asset that they don't provide you. So typically what you'll find is, my financial advisor said I shouldn't do this. Okay, did they give you a good reason? Well, gold is too high. Okay, well, did they give you the same advice 5 years ago and 10 years ago? Yes. Okay, so their track record is they've told you that it's too high. You've missed the last 10 years when it's gone up over 400%. In addition to that, you have to understand that they're also going to be telling you that you should not be well diversified in having a currency which the entire world is buying right now. The central banks of the world right now are telling their citizens, they're making the statement by adding to their gold reserves that they realize the U.S. dollar is in big trouble. They realize that the U.S. dollar is not going down a path that should be sustainable for the world's reserve currency. So you have to understand that your financial advisor has a vested interest in this. But the central banks of the world are some of the smartest people on the planet that are running these economies, and they're not buying gold because they think that it's not going up.
I agree with you, and I was thinking back several years ago when gold was $700 an ounce, and then it went to $702, $703, and I was just watching the spot price. I'm thinking, man, it's climbing. I better squeeze this trigger here. But anyway, $707 an ounce gold today really looks good, doesn't it?
Sure.
Yeah, it looks remarkable. And then that's the thing, is that people think today and they say, well, I wish I'd have bought it at 707 instead of 1,616 like it is today, and they think, well, I missed the boat. Well, you're going to say the same thing if gold gets to 2,000, 2,500, 3,000. You have to understand that the fundamentals that drove the market from 700 to 1,600 are getting better every day. The deficits are increasing. The debt levels are going up. The rest of the world understands this, and they're doing this in order to be able to stabilize their currencies before it's too late. And people in this country have got to start understanding that you don't want to be the last ones in on this. You want to start getting involved in this thing before the major push in this country comes. Because by a large margin at this point, guys, the United States is not in the gold market at this point.
Steve, let's hold that thought right there. We'll be back on USA Prepares. I'm Mark Wright with Vincent Finelli, and we got Steve Rand from Swiss America.
Thank you.
No whining. Only expert guests and seasoned opinions. Instruction that matters. At the controls, Vincent Finelli and Mark Wright.
You are listening to USA Prepares on KWTO 560 AM, the powerhouse of the Midwest. Vinny, a lot of people are listening to us speak with Steve Rand of Swiss America today. But before we get back to Steve, we got to talk about our meetup this Friday over at Ziggy's, the corner of Sunshine and Glenstone, 5:30 to 7:30. What's all going to be happening this week at our meetup.
High Yield Gardening, Mark. This week's instructor is Len Pence. High Yield Gardening. They've got a special menu for us, priced $5.99 to $7.99 for dinner. Class, please bring your like-minded friends. We're going to learn about High Yield Gardening. Glenn Pence is going to be on stage probably for about 45 minutes to an hour. Bring all your questions. He's there as your instructor.
That is going to be fun. You know, Len was really popular at the Spring Expo.
Sold out.
Man, sold out on 2 different seminars, and so that will be a great time at Ziggy's, 530, corner of Sunshine and Glenstone.
This Friday. We've got Steve Rand with us. Steve, we were talking about the price of gold, and some may say it seems high at this point. Actually, the price of gold measured in Federal Reserve notes appears to be climbing, but that's because the dollar is losing value by the minute. Would you agree with that?
Well, I agree with that completely. I mean, the dollar, the direction it's headed in is just it's amplifying the news that the world is going out and buying gold. They understand that the market has to be that they have to support their own currency by something. And since World War I, the reserve currency of the world has been the U.S. dollar. And if you look at an article by CNBC recently, they said that $105 per barrel oil, cotton prices at record levels. Typically, such commodity prices increase would send central banks running to the U.S. dollar. Okay, they said, but not this time. Central banks are shedding dollars. What are they buying instead? Gold.
Yeah, even China.
Exactly.
China is advising its citizens to buy gold immediately.
And well, as they should, because they have over $1 trillion in reserve, and they don't want to see that investment go down the tubes. It's funny, if you go to China, I went to China several years ago, and you could use the U.S. dollar. This was in 2007. You could use the U.S. dollar just about every place you went. And then when I went there back in 2009, the majority of those places that one time took U.S. dollars only a couple years before were no longer taking those. They wanted you to come back with Chinese currency instead. You can actually go into several of the airports in China, and you can physically buy it at vending machines, little gram bars. So what does that tell you? They're telling their citizens to buy gold, and here in this country, you don't hear word one about it from the government.
Steve Rand, you're absolutely correct. One of our instructors is from Central America, and he teaches how to negotiate. And he told us a couple of weeks ago that in Central America, no one will do a transaction with more than 500 U.S. Federal Reserve note dollars involved in it. They don't want them.
Can't blame them.
And they feel that it's like a hot potato, and nobody wants to get stuck with it at the last second. Steve, before you and I talk on the phone off the air, and I asked you the price of silver dollars. Now, Swiss America, of course, sells gold. They sell numismatics, and I'd like to talk about what numismatics are versus bullion. Can you just give us a thumbnail on what, if someone wanted to enter the arena in precious metals, and let's say they wanted to get some silver dollars as a nice, great starting point, and by the way, I love them. If they wanted to buy a very good to extra fine silver dollar, what is your price, roughly?
Well, if you were to go out and buy, like for instance, in that range, as far as what you're talking about, a very good to extra fine coin, you're looking at around $41.40 right now. And that includes everything, including shipping and handling, commission, everything all-inclusive. And the reason that's a great coin is because it's highly recognizable. In the event that things completely fall apart in this country and you need something that you could go ahead and take to the grocery store or go ahead and make a payment or get gasoline, whatever you need it for, if things do come to that, then this is something that everybody in the country is more than likely going to recognize. You're not dealing with something that's difficult to get liquid on, and it's a very low-cost margin compared to the silver price at this time.
Steve, I've got to tell you, I called some of my contacts in the local market at $39.28 silver in terms of spot. At $41, a silver dollar is a great, great bargain. I'm not kidding.
I think it's one of the lowest premiums I've ever seen on this particular coin, and we have people that are looking to get these because they believe that this is something that they're not only going to be able to make money on in the future as an investment, but more importantly, they want to have something on hand in case this whole house of cards comes crumbling down sooner than the mainstream is telling.